Is this a make or break few days for this rally? Well, joining me now is Kate Moore, Chief Investment Officer at Citi Wealth. Kate, it's great to have you on. We got stocks at record highs. Does it keep going?
Look, I think so much of what happens to the equity market into the back end of this year is going to be about earnings. One of the key things that we've anchored on has been that, most of the return this year has been driven by earnings. And this week, because of the big tech names, the mega caps that everyone has really anchored in their portfolios, are reporting, I think it's going to be really, really important for sentiment, perhaps as important for sentiment or even more than the policy decision from the Fed, where, of course, the market's pricing in close to 100% probability of a 25 basis point cut. I do think that we need to hear consistently from the market leaders, as well as from companies leading their sectors and industries across the board, that they're getting benefits from the AI and technology investment they've made throughout the course of 2025, and they have great hope and expectation for what that will be into 2026, and may cite productivity gains or, enhancements that will lead to better earnings and stronger margins over quarters ahead.
So if you see robust CapEx numbers or even revised upward CapEx numbers from the likes of Microsoft and Amazon and Alphabet and some of the other Meta names that are reporting this week, is that good for those stocks specifically, or is that good for the broader AI infrastructure trade? How to think about the read-through there?
I think it's good for both, but I will say the expectation, I think, from the street and from the buy side at this point is that we will get continuous upward revisions to CapEx spending targets. I think if we were to have even flatlining, that would be a little bit of a negative sentiment hit. What I will say is that we want to see the companies that are benefiting from the investment, sort of the makers of hardware and the enablers, continue to expect higher revenues than analysts are currently forecasting, and we want to see the adoption rate of AI and technology continue to increase across sectors and industries. Again, as I was saying, we want use cases, we want to see productivity enhancements coming down the pike, and expectations for further margin enhancement into 2026, when it may not be as easy of a slam dunk later in the cycle.
Is this still the place to put your money to work in this market, or are there others?
Look, it's uncomfortable to continue to want to own these large cap leaders, right? I would love to raise my hand and say I see a huge breadth of opportunities. And Dan was talking about a number of areas where there might be stimulus, of course, and then benefiting the U.S. economy into the end of the year and the beginning part of next. I think some of these areas, like the financial services space, particularly the banks, are also seeing a significant amount of ownership right now. And I want to see actually consistency from the industrial complex and from the manufacturers into the beginning of next year. I think that kind of cyclical area of the market is something that is less well-owned. We're not necessarily adding to risk there, but we'll be watching very closely for guidance from those companies as they report this season.
Do you stay domestic or do you look internationally?
Gosh, I think the U.S. still has the highest quality companies, and frankly, from a fundamental perspective, looks the strongest. One of the things we focus a lot on is earnings revision ratios. We look at the number of upgrades relative to downgrades over both a 1 month and a 3 month period, where the momentum is in terms of the overall expectations. And here's what I would say. The U.S. still looks head and shoulders above the rest of the world. We're watching very closely expectations for better earnings out of Japan, of course, with a change in government and expectations around a significant fiscal policy, stimulus over the course of the next couple quarters and years potentially. But we are seeing more idiosyncratic and specific opportunities in Europe and in other regions, less so adding to significant regional weights. We have had a little bit of an overweight in China. We continue to like the technology story in China. The government, of course, supporting this industry and encouraging additional investment, not just for their own domestic workforce, but also as a competition with the U.S. And so we expect that to continue to perform well over the next 6 months.
Okay. Kate Moore with Citi Wealth. Thanks for joining me.